So I think there's this fourth derivative effect. So to me, Bitcoin has these fourth derivative effects because there are subgroups like the maxis and others that are.
Hey guys, welcome back to Everyday Finance. In this video, Mark Yusko discusses about Bitcoin and crypto. Mark Yusko says Bitcoin, in my opinion, has these fourth derivative effects because of subgroups like the maxis and others who are, despite your orange pants, not wearing a maxi look and instead wearing a technology maxi. I'm an innovation maxi, but I'm not a Bitcoin maxi. And I still haven't decided on my mental model for whether or not we'll have a tech stack similar to the internet, which consists of TCP/IP, FTP, SMTP, HTTP, and www. Okay, could be a Bitcoin Filecoin, Ethereum at the top, and Solana or Cosmos or Polkadot in the middle. Maybe MH could have one. If we could have a lot of L1S with all these bridges, we might be able to have Bitcoin Lightning L, 3L4, but it's unlikely because the bridges are attack vectors. I believe you are correct, yes. And once more, I heard that from a very intelligent person today, so it's not my opinion, but I believe that's correct. And because a lot of L-Wars is cool, and I think it's good, and I can make a case for why that's really good, but interoperability is difficult. I heard some great information today on a couple of the panels that suggested that perhaps there are some ways to change the way people think. I love the debate from yesterday about you do your mainframe, and lots of things Michael Saylor discussed, so please watch the video to end and share. Subscribe our channel, Everyday Finance, thanks.
Well, I said it doesn't matter, but it always matters. But I was poking fun in the sense that I think there's a tidal wave coming in two things. One is the halving, and I think the halving cycle will trump, I'm not supposed to use that word anymore, but it's going to override all the other cycles. And then I do think this wall of liquidity is coming because BlackRock's going to get approved. It just is. Now, will others get approved? I don't know. I do care because two of my own pieces of, so I'd like them to get approved too. But that is going to bring tens of billions, if not hundreds of billions of dollars of demand into the physical spot market. And that's going to push prices. I have a Family Harmony account, which means my brother-in-law works at UBS. And for Family Harmony, I have an account with him. He's a nice guy and I like him, but I would probably not if I weren't married to his sister. And I've tried to buy everything. I've tried to buy GBTC, can't do it. I've tried to buy mining companies, can't do it. I've tried to, they have a whole list.
Really?
And it's blacklist. And at Merrill, it's worse. At Merrill Lynch, if, Jack, you made your money in crypto, they won't let you open an account.
Really?
So there's this bias against this whole industry and that's all going to go away. Can't buy it at UBS, but there are some places you can buy it, like in Schwab and I think Fidelity will allow it. I know Fidelity will allow it. So there are definitely places that can buy it, but a BlackRock ETF, no one's going to be able to say no. No one.
Yeah.
Not
BlackRock.
UBS, not Merrill Lynch, no one. And so now you've had all these clients saying, hey, I got to get some. No, they're saying it less now than they did 2 years ago because people buy what they wish they would have bought. So when it went from 10 to 69, they wanted to buy it. And now that it's on sale, they run out of the store. In fact, I say this all the time. Investing is the only business when things go on sale, people run out of the store. Every other business in the world, like you put those chairs on sale right there, people will knock each other over to get in the store to buy them. But you put stocks or crypto on sale, people run out of the stores. Humans are really simplistic animals, and there's nothing new in this world. Everything that we're experiencing has happened 100 years ago, 500 years ago, thousands of years ago. All the self-help books on management, Robert Maxwell has this empire. They're from Socrates. They're from Seneca the Younger. They were said 2,600 years ago. So the army manual is built on the writings of the ancient Greeks. Mm-hmm. So there's nothing new in this world. And human beings do two things really well. They buy what they wish they would have bought, and they sell what they're about to need. Mm-hmm. And they do it over and over. And I have proof, right? It's not just Mark speculating. Here's the proof. JP Morgan, 20-year data. Stocks made 8.5% over that period, compounded. Bonds made 5.5%. So all you had to do, pick one. Be in stocks, be in bonds, make 8.5 or 5.5. Pick some of each.
Be in both and just go home.
7.5.
Yeah.
Average investor, 2.9. How's it possible? All you had to do is pick one or put some of each? No, they bought stocks when they were hot and they sold them when they were not. And they bought bonds and then bonds went down and they bought stock. And my first job, I worked for 2 professors that invented quantitative investing. They were the first guys to run screens on mainframe computers, like before personal computers. And we had $1 billion. Back when $1 billion was a lot of money. Now we talk trillions. But they had a value bias. And the reason I got hired is after the recession in the early 90s, they got fired by all their clients at exactly the time that they should have been hired. And what did those clients do? They went to growth managers, which underperformed for 3 years. Then they came back to us 3 years later, just in time for our cycle and others that aren't. So I think there's this fourth derivative effect. So to me, Bitcoin has these fourth derivative effects because there are subgroups like the maxis and others that are
which,
very
despite
different.
your orange pants, you were not.
I'm not a maxi.
Yeah.
Look, I'm a technology maxi. I'm an innovation maxi, but I'm not a Bitcoin maxi. And look, I'm still not. I haven't settled my mental model yet. That are we going to have a tech stack like the internet? Right? There's TCP/IP, FTP, SMTP, HTTP, S, and www. Okay. Could we have Bitcoin, Filecoin, Ethereum at the top, and Solana or Cosmos or Polkadot in the middle? Maybe. Could we have one chain to end all chains, Lord of the Rings, Bitcoin, Lightning, L3, L4? Maybe. Could we have a bunch of L1s with all these bridges?
Yeah.
Probably not, because the bridges are attack vectors. If we could have a bunch of L1s,
and the only way for them to be safe is for it to be centralized, which would be against the point.
I think that's right.
Yeah.
And again,
I heard that from a very smart person today, so it's not my fault.
But I think that's right. And because a bunch of L1s is cool, and I think it's good, and I can make a case why that's really good, but then interoperability is hard. And I heard some stuff today on a couple of the panels, which were great, that maybe there's some ways to change the thinking. I loved the debate yesterday about, well, yeah, you do your mainframe, build, and I'll build the personal computer. Okay. That was brutal, but yes, that's exactly right. And nothing against the people building the mainframe, but maybe it's time for personal computers, or maybe it's time for little digital supercomputers we can walk around with our hands. And maybe we don't need a computer at all. Maybe it's all virtual. So the bridges, though, are hackable. Now, could we have chips that help with that? Like, we're invested in a couple companies that are doing chips that help with. This is crazy to me. So normally, if you have data or I have data, it's safe. It's encrypted. If I send it to you on WhatsApp or Telegram, it's encrypted. If I send it on iMessage, not so much. If we put it out in the cloud, like storage of our company data, it's encrypted. But then if I go to find your address, I got to decrypt it to operate on it. What's in those moments where you get hacked and you get all the data breaches. So these guys, these Israeli tech guys, have come up with a way to create a privacy protection unit that would allow you to operate on your data while it's still encrypted. Which makes my head hurt. It's like, how is that even possible? But if that's possible, then that will replace all of the chips that NVIDIA sell into cloud, because there won't be a cloud. It'll be this. That's pretty interesting. And so, because crypto, which has such a bad connotation, is simple. It's cryptographically secure. That's what it means. It's not a bad thing. It's not an evil thing. It's just cryptographic security, which in a world of, hacking and computer warfare, cryptographic security is a pretty big thing. And this is one of my big things. We don't have time to talk about it today, but I'm a big, actually, China bull. Everyone's like,
you are really?
Oh my God. And people hate China. They don't want to talk about China. They want to divest of China. Because you don't understand, they're playing a different game. 10 years ago, China figured out that the next war will not be fought with ships, be fought with chips. Right? They know this. Like, if you think about history of Central Reserve currency, world reserve currency was created by the most powerful navy, and the most dominant superpower had the most powerful military.
Which is the U.S., yeah.
Today's the U.S. The point there was, in the future, they figured out it's not going to be kinetic war. It's going to be cyber. And so they have invested in 5G and AI way ahead of everybody else. So